Hey guys, welcome everyone. Thank you for joining us. We are on a Wednesday, and if you are wanting to learn about trading and trading techniques, you are at the right place. So, thank you for joining us again. Today, we'll be discussing about a specific approach to trading which you can use, and hopefully, that will be something that you can try out. If it has not been very profitable for you in the past, then you can apply this new trading approach. Hopefully you will get better results. It has been useful for a lot of traders because it gives you focus, it gives you more quality in terms of the decisions that you are making. So this approach is called one trade per day. So we're going to be discussing about it for about 10-15 minutes, and then we'll go to the markets and look at what trading opportunities there are today for us to probably trade, hopefully during the live stream itself. Okay, so let's talk about one trade per day. So as you guessed, it doesn't sound too exciting, especially if you want to get rich quick. But this approach is not for somebody who has a lot of experience in the market. It's more useful for people who are just starting out, for people who are new to trading, or people who are just learning their way and learning about assets, learning about currencies, learning about the market, learning about trends, indicators. So if you're just learning and if you're just starting out, this is a pretty useful technique because it will force you to limit yourself to only making one trade per day, and there are actually benefits to doing it. One of it is you will have to make a choice which trades you're going to make. Okay, you're going to have to be forced to make a choice. Now you can choose in any given day or in any given week. uh, when you open your trading account, when you open the trading platform, you can make one trade. So you can either decide to trade based on news, you can decide either to trade based on trends, or you can decide to trade based on your specific trading strategy, whatever it is. Now, I hope your trading strategy does not include following other people or following or having this FOMO or fear of missing out whenever you see markets move very excitingly because they are reacting to some news or some events. So don't trade based on following other people, because that will mean that you are trading without thinking. So you really, because of your trading style, one trade per day, you really want to decide specifically why you're making this trade. Okay, you have a lot of time. There's 24 hours in a day, and the markets are probably open whilst you are awake, maybe 10 to 12 hours a day. So you really have a lot of time to decide. You don't have to rush into anything. You can decide whether you want to understand the context around the asset and around the economy that's affecting the asset. You can focus on news releases if it comes out. You can focus on technical indicators if that's specific, you have something specific that you want to focus on, or any other factor. But the thing is, you have all the time in the world to decide. You don't have to be forced to make a decision. you know um, I have to be quick, I have to open the trade within the next 30 minutes or something like that. Feel free to take all the time you need. Now, because you are being able to have thinking before making the trades. Now, ideally, what you are really aiming to do is to have quality over quantity. You're not going for many trades in a day. You're really focusing on the quality of your trades. Whatever decision you're making, it will be very specific in terms of the rules that you set for yourself. Whether you're using one indicator, two indicators, or three indicators, there will be specific rules you want to open your trades on. Now, if you don't follow these rules, then you're going to miss your chance to make profits for the day. You're going to miss your chance, because if you make a loss on that one trade, you're not going to be able to make another trade until the very next day. So this is why you really need to focus. Look at past results, past trades that you have made. Were there any mistakes? Be sure to check out all the mistakes, and you learn from all the mistakes that you've made, and then making sure that the decision that you are about to make for today is already excluding all the mistakes that you've made in the past. If you have really bad experience trading with assets like gold, for example, so don't open a trade with gold. If you don't have a good trading history with gold, find another asset, practice on your demo account, and then once you have a good win rate, total trades, if you make total a total of 10 trades and you are able to win 6 or 7 trades, so your win rate is about 60 to 70%. So find an asset where your win rate is pretty high and then trade those assets. Okay, if you have an asset where you always lose and out of 10 trades you are probably winning only 1 or 2 trades, avoid that asset completely until you've got a strategy for that asset. So for as long as you have a low win rate for specific assets, avoid those assets. You don't want to go into the market with a high probability of losing. Okay, so if your trading history is telling you that you always lose money trading Euro USD, you always lose money trading gold, stop trading those assets. You can trade on your demo account whilst you're practicing and finding a strategy to trade and make profits on those assets, but when you're using your live account, trade assets where you've got a pretty good win rate. Okay, so your win rate by taking the total number of trades and looking at how many winners did you make. Now that as a percentage, if I make 7 winning trades or 7 profitable trades out of 10, so my winning percentage is 7 out of 10 times 100, so it's around 70%. Okay, so you do want to focus on thinking, you do want to focus on quality more than quantity. This is what's special about one trade per day. Now what else can we get out of this approach? The other thing that we could get is reduce stress. You really don't have to worry about too many things. You really don't have to worry about reading about 2 or 3 different economies. You can probably focus on just one big economy or maybe just 2 because the assets are correlated. There's always 2 economies affecting a particular asset. And then you don't have to read about other news that's coming out that's affecting other countries. Keep it simple, so less stress. And then because you are only looking at one chart, when you're just looking at trying to make one trade per day, you won't be looking at 5 or 10 or 15 charts. You're probably going to look at 1 or 2 charts. These are the assets where you've got a good trading history in your demo account, you've got a pretty good win rate, and you are feeling confident, you have a positive vibe about these assets. So then you want to look at these assets just looking at those 1 or 2 charts. Look at it from the morning when the Asian session is open, and then look at in the afternoon when the London session is open, and then look at if you're opening this if New York is nighttime for you guys or evening for you guys, then you focus on the New York session. And then because you can look at these assets only 1 to 2 charts throughout the different sessions, Asian session, London session, New York session, then you can more or less see how aggressive the market is about those assets. Because if the markets are not aggressive, then you know that the probability of making big moves is probably small, and then you can avoid those assets. If you see the assets making big jumps or big movements in price, and there's aggressiveness, traders are aggressive about the asset, there's volatility there, there's price movement, there's exciting price movement, then you can have more, you can be ready for the next price action. Because when you have big price movements happening, your chances of making profits also increases, because the volatility means that the price will travel a bigger range. Okay, when it travels a bigger range, you have a higher probability of making profits because of the price difference. If assets are moving in a small price range, especially when it's moving sideways, chances are you're going to get yourself into a trap, and you will have a lower probability of making profits in that kind of a situation. So focus on 1 or 2 assets, and even then, remember, because we are going over quality and not quantity, you really want to be patient about the whole thing. You don't want to rush it. If you're watching 2 different charts, 2 different assets throughout the different sessions, Asian session, London session, New York session, if you do not find a good setup for entry, don't open your trade. Okay, because when you open a trade in a bad setup, or when the setup is not there, you are just throwing money to the market. And remember, the market is about people taking money from other people. When you are in the market, if you are making a mistake, smarter traders will take that money away from you. You will lose the trade, and smarter traders will make profits from that direction. If you're saying, okay, this is going to go down, and you're rushing it because the setup is not there, but you just want to get the trade running. Now, smarter traders who wait or who trade the opposite direction, they have a better chance of winning because they analyze the assets fully, and you are, they probably have a setup that's working for them, and you haven't seen your setup coming up, so you make a trade. So that's really increasing your risk of making losses in the market. So don't do that. Be patient. Okay, no patient, no success. So always remember that. And then the thing about waiting for the right setup, the thing about thinking and really focusing on quality before you make your trading decision, those things are really forcing you to 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 be disciplined. So that's the other benefit of applying this one trade per day approach. You will be forced to discipline yourself, because you can't make silly trades, you can't make trades without thinking, and you can't make too many trades. So if you lose that one trade, you don't make profits from one trade, you can't come back to the market and say, I'm going to make back that money that I lost today. You can't do that because you're using the one trade per day approach. So that means whatever losses you make for today, you're going to look at what happened, look at the assets, look at your analysis, look at your assumptions, look at your trading plan, and look at your trading size. So you'll be discovering things that probably did not work well or probably went wrong. So make a note of all those things, in a disciplined way, so that you can bring those lessons learned from today's losing trade, so that you can make a better trade tomorrow and future days for the rest of the week or for the rest of the month. Okay, so it really forces you to be disciplined. You can't jump without thinking, and you can't jump trying to follow other people, because you only have one chance every day. So make it a really good one before you make the trade. And about getting the success itself, you do want to identify your setups, and then making sure that not only do you have the setups defined in your trading plan, you also want to have your confirmations prepared. So if you have a setup, make sure that you have confirmations for those setups, because it'll be a waste of chance where you see a setup, but if you don't have any confirmation to use to check that setup, then it could be a fast pullback that's pulling you into the trade, to jump into the trade. But if you don't have confirmation, then it could be a temporary situation, and the asset could move in the other direction in a very short time. So apply confirmation, apply some way of validating the direction that you have found. And once you have validation, once you have confirmation, you confirm your setup, it'll be a higher probability trade for you, and it'll be something that will serve you, will help you in all your future trades, because you will be disciplined in terms of thinking. It needs to be analyzed, it needs to fit with my trading strategy, it needs to be, I need to be using certain indicators, I need to trade assets that I have a good trading history with, a good win rate. So when you have all these things in place and you're doing it every day, every time, because you can't skip those steps, because you're chasing profits with just one trade per day, over time it'll become automatic, and you'll become a better trader coming out of this process. Now, if it's already working for you, if you apply the one trade per day approach for 1 to 2 months, and you are enjoying it, and you are making pretty good profits out of it, and pretty good win rate, then you can probably move out of that phase of one trade per day and probably move to 2 trades or 3 trades per day. But that is only if you are successful. That is only if you are happy with the results, because there is no point expanding to doing multiple trades per day when you don't have a good track record of making profits. Seriously, there is no reasonable way, that doesn't make sense for you to expand. If you can't make good profits with one trade per day, what is the sense of expanding it to making 5 trades per day? So you really will be forced to improving yourself, improving your trading strategy, and then you can expand your approach to making 2 to 3 trades per day, and then maybe more than that if you are getting consistent profits over time. Okay, so that's the approach, 1 trade per day. It may not be for everyone, so you can try it out if it suits you, if it fits your trading strategy, if it fits your um, risk management. Go ahead and try it, enjoy it, learn it. It's a learning process. Every approach, every style that you apply to trading will be a trading process for you. All good traders will tell you the same thing. It's all about continuous learning. So if you enjoy it, go ahead and apply it. If you grow out of it and you become so good, you can expand it to make it, as a foundation, and then go into 2 trades or 3 trades per day. Or if you don't enjoy it, then find something that is more closely aligned with your psychology, your risk management, and your trading strategy. So this is just a suggestion. You could try it out, especially if you are a beginner trader, because with 1 trade per day, you can never destroy your trading balance. You can never destroy it unless you make a big bet. So don't do that. Always trade with 2% of your account balance, or less than that, so that you don't destroy your account with 1 trade. Okay, so that's 1 trade per day approach. Enjoy it if you want to try it. Now let's go to the markets and see what's exciting for us today. So I'm having here AUD USD. There's an obvious trend with AUD USD today. I'm on the 15 minutes time frame. Now I'm also looking at Euro USD, also on the 15 minutes time frame. We can look at these two with different approaches. So with Euro USD, I have 2 moving average lines. I've got let's have a look. I've got the 10 and 20 simple moving average lines. Okay, so SMA 10 is the yellow line and SMA 20 is the green line. So I've got a fast line and I've got the slow line. Now for AUD USD, I have just price action. So I'm going to be reading support and resistance as well as the direction of the price action when I'm deciding whether it's an interesting setup or not. Okay, so let's begin with Euro USD. Let me know if you have any questions. How to scalp in a short time frame from Clever YT. Thanks for your question. How to scalp in a short time frame. So if you're scalping short time frame, then you will not look at charts longer than 15 minutes, and you are probably focusing on trading on the 1 minute or the 5 minutes time frame. Now, although you're going to be trading 1 minute and 5 minutes time frame, you still want to analyze using the 15-minute chart, because it'll give you slightly longer time frame to look at the trend, and bigger time frame trend reading is more important than smaller time frame trend reading. Okay, because if you're looking at trends on the 5-minute chart, it could be changing too fast, and more so if you're on the 1 minute chart. If you're looking at the 15 minutes chart, then you can look at slightly bigger trend with less noise. Okay, now with less noise, then you know the bigger direction is either going up or down, and then as you go down to lower time frame, the 5 minutes or the 1 minute, then you already know that, for example, if the asset is going down, and then you can quickly wait for a push up on the 5 minute on the lower time frames, and then if it's pushing up and you know on the 15 minutes there's a bigger trend going down, and all the moving averages on the 15-minute chart is showing you that the asset is going down, then on the shorter time frame, the 1 minute or the 5 minute, you will only have to wait for the asset to pull back up or do an upward retracement. When the asset retraces, you open your downward trend to be consistent with the trend of the big trend on the 15-minute chart, and that's how you make your money. Okay, that's how you make your profits, and you should be trying that. Now, in terms of reading the 15-minute chart trend, you can use support and resistance. You can also use other indicators. Okay, but I find the easiest will be support and resistance, or if you want, you can use simple moving average lines. Okay, So let's look at Euro USD. So the asset is clearly moving down. Look at that. If I'm just scrolling back, the asset moved out of this sideways pattern and starting to come down. Okay, starting to come down. Now, when the asset starts to come down on the 15 minutes time frame, you can see that the asset, the fast line, which is the yellow moving average, that's my fast moving average. That's simple moving average 10. Crossing the green moving average, which is SMA 20, crossing from a higher price level, moving down. Okay, so that's a bearish trend, and when that cross happens, really I'm looking at what is the nearest support from this cross. The nearest support, previous support. So the previous support is here, and the nearest is probably, if you want to be really picky about it, if this is the cross happening right here, the closest support before this cross happens is probably here or probably here. Now a bigger support is here, but if you want to use this support, then you can use that. Then basically, if the cross, the simple moving average cross happens here, and you mark the price support, the price level at this level 10869, and then as the candle moves down and breaks that support, and then after breaking that support it stays below that support level, then that's confirmation that this cross and this downtrend is going to stay for a while. Now remember, this is 15 minutes time frame. What that means is one candle is 3 15-minute candles. So the moment it breaks and leaves this support level, I can already go down to my 5 minutes and open a trade there. Now maybe you don't want to go to 5 minutes because you know that you're going to trade 2 or 3 5-minute candles. So 2 or 3 5-minute candles is basically meaning 15 minutes. Okay, that's 15 minutes. If you trade 2 5-minute candles, that's 10 minutes. If you trade 3 5-minute candles, that's 15 minutes. So you set your time to be 10 or 15 minutes away. Find a suitable trading amount based on your account balance, make it 2% or less. That's how you manage your position size, and then open the trade in the direction of the trend. And that could have been profitable because the trend continued, and then there was a pullback somewhere here. So we're waiting for the next cross. It didn't happen, the asset didn't pull back up, which means the downtrend continues to go on. And now we are seeing here that the asset, okay, there you go, you've got a new sideways trading there, and then you've got a new cross right here. Look at this cross. Okay, so the yellow line, the fast line, crosses the green line from high position to low position. And where's the support before this cross happens? I think the support is here. That's the nearest. Okay, you can pick this one if you want, or this one. Now, did the price cross this support level 108,339? Yes, it did. Did it stay below that support level? Yes, it did. So somewhere about here, you will probably be opening your trade. And if you are trading 2 or 3 5-minute candles, you would have made profit because it continues to go down. Okay, so that's pretty useful. Euro USD still in a downtrend. Now, what about now? What about right now? Well, here's the thing. It went down so fast, and we are away from this cross. So what I think is better, especially if you're trading one trade per day, is to wait for the next cross. Wait for the next simple moving average cross to happen, and then find the nearest support. Wait for the price to break that support, and then you can open your trade. Okay, so that's Euro USD. Let's look at AUD USD. Online earning. What's the best 1-minute strategy? Yeah, so with 1-minute strategy, you can really use the same technique. You can look at strong price movements like we've discussed here. Okay, look at this strong price movement here. It's breaking support. Now, if you watch this trend on the 5 minutes, now if you're trading on the 1 minute, you also need to pay attention to the 5-minute chart. Okay, so When that cross happened, which is right here, hang on, let me have a look. What was that price again? So the price is 108,317. 108,317. Okay. 108,317. Yeah, it's about here. So when the cross happens, it really wanted to break through the 10317 support, which is about here. Okay, now as you can see with the 5-minute candles, it will break that support right here, and then this candle, which is the next 5-minute candle, is staying away from 10317, the support line here that we saw in the 15 minutes time frame. So because the candle stayed away from the support, and it stayed away by staying low, by it continues to go down, you can open your 1-minute trade like that. Okay, as long as the asset is moving down and the next candle is showing that it's not going back up and it's continuously trying to push down, you can open your 1-minute trade there. Okay, and it's something that you can also, if you want to be specific about it, you can open your 1-minute chart, and when you see that is happening, you can wait for the 1-minute chart to pull back up with a green candle and then open your down trade. Why do I say that? Because when the asset is moving in a downtrend on the 15 minutes chart, okay, there's a big downtrend going on happening, and then you have the 5-minute chart also going down, then really on the 1-minute chart, things will be moving up and down, but still moving in the down direction. So on the 1-minute chart, you are not waiting for the assets to go down, you're waiting for the asset to go up. Okay, you're waiting for green candles, because with the big trend pushing down, the up candle or the green candle is going to give you a good entry point so that you profit as the asset continues to go down. Okay, so that's a 1-minute strategy you could use. Try it out. If you enjoy it, then if it's profitable for you, keep doing it, and pay attention to what assets that are profitable for you and focus on those assets. Okay, what else? Okay, so let's go to AUD USD. Let's see if we've got any trades here. So on the 15-minute chart, the asset is clearly pushing down. It broke the support right here and then went down, retracement. Now the retracement did not come back to the support level, which means the downtrend is real. Okay, now this peak continues to push the asset down, and we need to find where's the next support level. The support level is right here, and the asset has pushed through the support level and then is staying down. Now right now the asset is pushing up, but this push up is different from 1-minute push up. This push up is a 15 minutes push up. We really have to wait for this to close. Okay, we want the candle to close away from this support line 0.66234. If it closes above the support line, then I'm not too confident that the asset is going to continue moving down. Okay, now as it is, the asset is really trying to touch that level, that support level, and I think it's already touched the support level. So which means I'm going to wait for the asset to push down some more before I open a down trade, because if the asset is pushing down in a very strong way, it wouldn't come back to this support level. Okay, because it's touching the support level, AUD USD is a bit risky for me to open a down trade right here. So I'm going to wait for more evidence of downtrend going on. Right now it's a bit dangerous for AUD USD to open a down trade. For Euro USD, really we are waiting for the next moving average cross. Okay, we are waiting for the assets to pull back up, and then for the yellow line to cross the green line again, and then I'll probably have more confidence to open a trade with Euro USD. So both assets look like they are in a downtrend, but at the moment they look like they are consolidating It looks like they're going for a sideways trading or maybe even retracement. So I'm gonna wait for that to be over. Okay, let the retracement complete itself and then move out of the retracement phase. Then probably we'll see the next trend, whether it's going up or down. Okay, so I hope that has been useful to you and you enjoy and get value from the video. If you have been enjoying the video and gotten value out of it, please do like and subscribe, and make sure to share this video with your friends, especially those who love and enjoy trading, so that they could join us and also enjoy talking to us in the discussion. Let me know if you have any further comments or feedback. You can put them down on the comments or on the live chat. Be sure to also take advantage of the promo code. We have a promo code down in the description below. Use it to double your deposit when you make a deposit into your trading account. Now, as always, enjoy trading and do lots of trades. If you can't do it on the live account, do it on demo account. Why? Because the more trades you make, the more you will learn about yourself, and the more you will learn about assets, and that is the key to become better and improving as a trader. Okay, so I will see you next time. Enjoy your trading. Bye bye.